Hey, this is Greg Pearson with the Gravity Wealth Group and Creative Asset Solutions. Today we're coming with you with a new market measure called Midday Market Recap. What this series is going to be about is going to be a series on telling you how the market is moving, how it's fluctuating, whether it's going up, down, left, right. And what we're going to try to do is not tell you what to buy or what to sell, but just show you how the market is moving. What these videos are going to show you from week to week is how the market has moved on the previous week and how it's starting to move at the beginning of this week. These series will be aired every Tuesday around at the end of day, and we'll kind of show you not only what the market is doing or what we believe it might be doing. In recent weeks, we've seen just some serious volatility with the coronavirus and the war on oil. Basically, everybody knows about the coronavirus and what that's doing to the economy. It's really just driving fear into the market, and fear means selling. And as most of you know, your portfolio, sadly, were up here in December and immediately started to tank as the new year started with the fears of the coronavirus. Now, another thing that's happened to the market recently is this war on oil. Historically, we've kind of had an agreement between OPEC and Russia and our shale companies. We decide kind of what oil is going to be priced in at, and that way the oil prices are pretty stable. And historically, when oil prices are actually lower, it's actually better for the market because that means the consumer, that means you and me, have more money in our pocket so that we can take that money and put it into the market. This is the first time that I can remember, or any of my colleagues can remember, that when oil is actually dropping like a rock, we're actually seeing the market drop with it. It's just uncertainty, and uncertainty usually means fear in the market. For the first time in history, oil went negative. Now, what does this mean? Well, as of yesterday, the price of oil was negative $40. Now, this doesn't mean that you can go up and fill up your gas tank and get cash back. No, what this means was because of the war on oil driving prices ever lower, we had an abundance of all these barrels with no buyers. These producers were still pulling oil out of the ground with no buyers in sight. And what caused that was people thinking that oil would go right back up, but it didn't. So yesterday, they were giving away barrels and giving money to the buyer to take the barrels from them. This is all due to supply and demand. They needed to have the space to keep drilling oil next month, but they had all these barrels ready, and it was more costly for them to shut down production and sit on barrels than to just give it away. Now, this really had a negative effect in the market, and you've probably seen for the past 4 days, we've had some really choppiness in the market and even some big red drop-offs. Now, does this mean we're going to retest those lows about a month ago where we've hit that bottom and retest that and see if we're going to go lower? Time will tell. The Fed seems to really not want to make sure that's not going to happen, so they are pumping money into the market to make sure that doesn't happen. But we'll see if the buyer comes back in and says this is a great opportunity to buy long term, or if the bears decide, hey, this is going to be another swing lower. All I can say, it's going to be interesting. So right now I'm going to show you on your screen here a chart of the market. As you can see in the market, we came from December highs all the way to these lows. Now, what I'm showing you here is the S&P 500. What this demonstrates is usually the average of the American economy, the upticks and the downticks. Usually all of your big stocks, everything that you're in, mutual funds, everything usually follows this index. Now, as you saw, we had a December high, but we came all the way down to this 220-ish range. Now, people, this was the bottom for a time here. We were just oversold so much all the way down that a correction, usually an overreaction, means a correction's in order. So we had this for the last couple weeks. We've had this pop up, and people have been seeing their accounts grow back to that number which they remember having back up in December. But we haven't hit there yet. We're still quite a ways off. And will we see the return to all-time highs? I don't know. But the last 4 days, because of the oil crisis And because of probably the uncertainty of reopening the US economy back up, we're seeing some tipping point. Maybe this is another top before we hit a all-time low again. Time will tell, but be prepared. Make sure you are watching this closely, because if you don't react to the action, you could get stuck and you might be holding for a long time. I'm not telling you to sell, I'm not telling you to buy. I'm just coming to you with the facts to show you what the market is doing and hopefully make you have a better determination and a better target for what you need to do.